Right now, the real altcoin season has already begun, but it looks nothing like the last one. And if you're watching the old signals, guys, you're missing every move. Over $63 billion has poured into the crypto markets this year. $63 billion. We're seeing new records for ETF inflows, stablecoins, and corporate treasuries. The world's biggest companies are racing to buy Bitcoin, and the Fed is quietly letting liquidity flood back into global markets. So the question I know everybody's asking is, why is Bitcoin not exploding? And with all of this capital, why is Bitcoin just up 13% year to date? Why do altcoins feel stuck in a coma? What's the real story? And what's the hidden trap almost nobody is talking about? Guys, well, today I'm breaking down the paradox that's baffling everybody in crypto, the stealth supply shock that could catch everyone off guard, and why alt season, as you know it, might not be dead, or at least put off a little bit, and how the real smart money is stacking their bets right now. So guys, pay attention, because the old rules, well, they might have just been rewritten. Let's start with the real raw numbers. Look at this chart right here from 10x Research. In just the first half of 2025, $63.1 billion in new liquidity has hit the crypto markets. That's stablecoins, ETF flows, and corporate treasuries, and more. And if you zoom out, last year's total was $147 billion. So we're basically on track to do those numbers again this year. And when you break it down, stablecoin supply has grown by $35.5 billion this year, up from $61 billion last year. ETF inflows have contributed another $12.1 billion. While that's less than 2024's pace, it's still a mountain of fresh capital. Corporate buyers have been particularly aggressive, if you haven't noticed, like MicroStrategy, for example, now officially renamed Strategy. They just keep stacking and stacking and stacking. And as of now, they've got 592,345 Bitcoin, mind-boggling, up from just 140,000 2 years ago. And Metaplanet in Japan, sometimes called the Japanese MicroStrategy, recently announced their plan to raise $5 billion to buy even more Bitcoin. They just bought another 1,111 coins at a little bit over 100,000 per coin. That brings their total to 11,111 Bitcoin on their balance sheet, now worth over $1.2 billion. But it's not just about Bitcoin anymore. Institutional FOMO is spilling over into altcoins also. We're seeing a wave of publicly traded companies from New York to Tokyo actively adopting the Sailor strategy and diversifying their strategies by adding high conviction altcoins instead of only BTC. Names like BNB, Hype, Sol, and Tau are now appearing on corporate balance sheets as firms raise hundreds of millions of dollars looking to front-run the next trend and capture asymmetric upside. Personally, I think there's a real opportunity here, not just in these companies making these moves, but also in the altcoins themselves. Think about it. If they're buying up these altcoins in the treasuries, that's a sustained demand. If you guys are interested in a video exclusively talking about the specific altcoins and the corporate treasuries buying them, let me know in the comments below. I think it could make an interesting show. I mean, it's one thing to get ETFs that are allocated to specific altcoins, but almost just as powerful, or perhaps even just as powerful, are these corporate strategies buying these altcoins as well, right? They're like ETFs in a way, constant bid. I think maybe not quite as powerful, but almost. So the question is, with this flood of new money, why isn't Bitcoin already blasted through $150,000 or $200,000 by now? Why doesn't it feel like the biggest market in crypto is just do something? You know, that poking with the stick meme, do something. Come on. To really understand what's going on with Bitcoin's price, you guys need to zoom out a little bit and look at the global macro backdrop driving this market. Beneath all the volatility and headlines, we are witnessing one of the stealthiest liquidity surges in financial history. Global M2 money supply, which we always talk about on the channel, a leading indicator, has been just solidly pumping as countries like Europe and Asia are quietly printing more money to keep their economies afloat. Even the US, which hesitated to call this stimulus, Well, they've been pumping liquidity back into markets through policy moves that, in practice, function as a de facto form of easing. All of this fresh capital is designed to encourage risk-taking and asset buying. And it's a tide that ultimately lifts all boats: stocks, real estate, and yes, of course, our precious bags. Take a closer look at the signals coming directly from the top. Recently, Jerome Powell himself admitted that if it weren't for the expectation of higher inflation from tariffs, the Fed would have continued cutting rates. In his own words, quote, "If you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting." The difference, of course, is that this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs, and we just can't ignore that, end quote. Now, in my opinion, this is political, right? Why would have Jerome Powell decrease rates when Biden was running for re-office and Kamala and stuff? Inflation was much higher, but now, even though tariffs have been a thing for months and months and months, they're not causing inflation, and inflation is way lower than previously. They're still not cutting rates, but they're expecting inflation to come, even though it hasn't really come yet, even though we've had tariffs for a while now. To me, this feels political. Even Vice President J.D. Vance called out the central bank for inconsistently publicly challenging Powell by saying, quote, "I'd love to hear an argument for why Powell cut rates 50 points before an election, but can't do it now with lower inflation," exactly as I was saying. We are witnessing a moment where monetary policy is driven as much by headlines, forecasts, and election cycles as by hard economic data. So what's the takeaway? The world's monetary authorities are quietly juicing the system. While everyone argues about interest rates or CPI, the real action is happening under the surface. More liquidity, more risk-taking, and ultimately, a market being primed for explosive moves, even if the price action hasn't shown up yet. And all of this new money, well, it's vanishing before it ever hits the exchanges. Take a hard look on the data on Bitcoin supply sitting on exchanges. According to both CryptoQuant and Glassnode, BT exchange reserves have plummeted to almost all-time lows. I mean, it's the same story every week, right? It just gets less and less. People in the comments sometimes say supply shock is not going to happen, but trust me, it will happen. I mean, we're already seeing it. This is why it's easier for the price of Bitcoin to violently swing down to $98,000 and back to 108 and back to 100, is because the liquidity is getting thinner on exchanges. This is something that people don't often realize. There's less exchange liquidity, which means the order books are thinner, which means it takes less money to move the price of Bitcoin. This is just a fact. To give you some context, over 14 million Bitcoin, which is roughly 74% of all coins in circulation, it's actually more because a lot of these coins are lost or gone forever, are now considered illiquid. These coins are locked in cold storage, held by ETFs, stored in long-term wallets, or absorbed into corporate treasuries. And this illiquid share has only accelerated as ETFs and public companies are quietly vacuuming up every spare coin they can find. The result is that just 2.6 to 2.7 million Bitcoin remain on all global exchanges. And that's shrinking every day and every month. But here's what most people are missing. The big buyers aren't coming to Binance, Coinbase, or Kraken to market buy 1,000 coins at a time. Instead, they're going through OTC desks, direct custodian deals, and using financial engineering, like private placements, convertible notes, and even bonds to scoop up supply before it even shows up in the public order books. But guys, this will inevitably come to an end, right? The OTC markets are drying up too. So they will be forced eventually to buy it on exchanges. But that's why recently, even with the flood of demand, the corporate treasuries, the ETFs, everything that we've talked about on the channel for weeks and weeks and months, that's why we still don't see Bitcoin skyrocketing in price yet, because there is still supply on OTC desks, which is happening off exchange. Adam Back, one of Bitcoin's original cypherpunks, nailed it when he said Bitcoin treasury adoption is the new alt season. Public companies are now racing to out MicroStrategy each other, doing whatever it takes to increase their BTC per share price. The number of public firms holding Bitcoin is skyrocketing, and these companies now hold almost 4% of the total Bitcoin supply. And guys, you have to ask yourself, like, are you paying attention? Are you waking up? Because even though the price hasn't skyrocketed yet, when are you going to get your Bitcoin? Are you going to get it after the price skyrockets? Or are you going to look and see what's happening and understand that I better get my Bitcoin right now while it's still considered cheap? Because I believe over the next 10 years or so, 10, 15 years, there's still another 100x left in Bitcoin. Yep, $10 million. I think that's very reasonable. But it's not only able to be bought off exchange like on OTC desks. You can see it reflected in market premiums. Like Metaplanet, their stock in Tokyo is trading at over a 5-fold premium to the actual net Bitcoin it holds. Investors are so desperate for access to publicly traded Bitcoin that they're paying through the nose, literally hundreds of thousands above spot for exposure. When those premiums explode, you know supply is getting dangerously tight. I mean, I don't understand why these corporates don't just adopt their own spot Bitcoin buying strategy instead of buying these publicly traded stocks, accumulating Bitcoin. But I guess they just haven't learned, not your keys, not your crypto, right? Like this is to go, it also shows you where we are on the adoption curve. We're at the very beginning. If you're watching this, you're early. So pat yourself on the back because eventually a lot of people who want exposure to Bitcoin are just going to go buy Bitcoin, right? Not your keys, not your crypto, not your keys, not your Bitcoin. Corporates don't understand that yet. They only understand, they can't understand it. They don't understand this thing that you and I have understood for years. Very important. So no, we're not in this typical altcoin season that if you were here in 2021 or 2017, we're not there yet. But what happens when the next wave of retail FOMO returns and there's almost no supply left on exchanges? That's when you get to see true supply shock because the retail, they will only buy Bitcoin on exchanges. Historically, we see that most Bitcoin returns, the biggest asymmetric upside parabolic moves happen in just a few days out of the Bitcoin bull cycle. And also the real moves always come when people least expect it. And the fact of the matter is that 2025's so-called alt season has been brutal for most. I mean, myself included. For years, you could scatter your bets across altcoin universe, grab a bunch of meme coins or hype tokens and watch them go up 10x or 100x in a roaring bull market. But now that easy mode is over. Altcoins across the board have struggled. And even the big names like ETH, Sol, Sui have had to grind through gut-wrenching dips and long periods of boredom and doubt, and they're still not performing magnificently. But here's a shift. The new game is about patience, quality, and conviction. But the smart money is focused on large caps and the builders who are still working, even if the hype fades, building something that they have conviction in. Ethereum, Solana, Sui, yes, they've all taken their hits. But when the market finally flips risk on again, which keep that in mind, we're not in a risk on environment yet. These are the projects that most likely will lead the way. And if you've been patient and accumulating since 2023, you're probably starting to learn the real lesson of market cycles. Buy the dips, chill out on the daily candles, chill out on the hourly candles, zoom out, take a breath, touch some grass, and keep accumulating when everyone else is fearful. Be greedy when others are fearful, be fearful when others are greedy. Meanwhile, real innovation is alive, and if you look a little bit deeper, take Sui, for example. Recently, one of their founders teased robotics, integrations, and AI-powered automation during a team offsite. That's the sort of development that can flip a narrative overnight. Quiet work that becomes a headline when the markets wake up again. At the same time, most meme coins, and there will be some outliers, but 99.99% of them, and microcaps are unlikely to survive the next reset. The playbook has changed, ladies and gentlemen, and now it's about tracking where institutions and corporate players are actually putting capital, because that's why treasury stocks like MicroStrategy and Metaplanet have become the new proxies for the altcoin exposure and are trading at massive premiums for access to their Bitcoin holdings. So we need to always be nimble and be able to adapt and be dynamic. Focus on conviction and coins that are solid. Accumulate quietly during fear and prepare for a market that will reward patience, research, and real conviction far more than any blind gambling. And I know because I read the comments, a lot of you guys do not have patience. That is dangerous behavior. Patience is rewarded through massive gains. Again, those who are patient and prepare and positioned get to take advantage of those few days a year that make up majority of the gains in any bull run. If you're not there, if you're effing around on these tiny little microcaps that have no utility, and you're not properly paying attention to where the real money is going, you're going to miss out. Patience is rewarded. And the most important thing, you think in 2012 and 2013 when I got into the market, I was sitting there hoping to be rich in 3 months? No. No, I've watched Bitcoin go from $25 to $1,000 back down to $90 and so on and so forth for years. It took me 5 years of patience in Bitcoin before my life was changed and I became a different place in my life financially to where I felt comfortable. 5 years of patience, holding Bitcoin. That's all I was doing. Still working, still trying to do stuff before my life changed. Patience is key here, guys. Patience and conviction, I should say, right? Because I had conviction. That's why I held my Bitcoin. Even though despite the dips, despite the sell-offs, despite the bear markets, I had conviction. And a lot of these altcoins that we talk about, these major caps, they are building world-changing tech. You can tell from the mentality of the rest of the world that they simply don't understand decentralized applications, DeFi, smart contracts. This is still super foreign to the institutions, the big money out there. Super foreign to 99% of the world. Decentralized applications and use cases for smart contract layers like Solana and ETH and Sui. Most people have no idea. They just kind of think that this is like going to be some sort of world computer or something, but they don't know. They haven't thought about it and they haven't played around with decentralized applications. They don't know the benefits of it. They've never used a DeFi app. They've never used an Aave or anything like that. So patience is super key here. What you're seeing, the price of Solana, the price of Sui, the price of ETH, are just from speculative investors who believe that one day there'll be massive adoption on these chains. And guys, there's another revolution happening right now as well. One that might even be bigger than the spot ETF. In the last 90 days, payment giants that we talked about like Fiserv, MasterCard, Robinhood, and Kraken have gone all in on stablecoins. Fiserv is rolling out the FIUSD on Solana, making it interoperable with PayPal's PYUSD. And MasterCard just joined the global dollar network, linking up with every major TRADFI player in the space. The crazy part is that these companies aren't even chasing stablecoin yield. They're rebuilding the payment rails for the next 100 years of digital commerce. Quote, "We're not looking to make money off yield," says Fiserv. "We want to unlock commerce with stablecoins. Thank you, thank you, thank you. I really want to pay with crypto in everything I do. No more banks, please." So this is kind of a funny, like, two-way street here, right? This is, on one hand, TRADFI capitulation, but on the other hand, it's a TRADFI evolution because the lines between banks and crypto are essentially gone, right? Even Fed Chair Powell is giving the green light saying banks are free to conduct crypto activities. Great, right? Maybe now I can not be banned from banks, but do I really want to use banks? No, I want to use crypto. Just crypto. I want to custody my own crypto. I don't want to use banks. I just can't wait for everyone else to catch up so that people start accepting it everywhere. But that's happening. That's the point of what we just mentioned, right? MasterCard and everyone else using stablecoins. Like, that's happening. But what does this mean for Bitcoin? Well, it means the infrastructure is being built for global 24/7 unstoppable demand. And every new user or business plugging in is another potential source of pressure on the fixed Bitcoin supply. So what are the whales, the institutions, and the real survivors actually doing right now? Are they chasing every headline and getting shaken out by every dip and caring about the war? No, not even close. They're stacking conviction, ignoring the daily noise, which I've told you guys to do every day, and accumulating into the boredom. Bitcoin remains the core position for those who get it. Every major institutional framework is focused on stacking Bitcoin first and foremost. But soon, it won't just be about Bitcoin. And I know this from the talks that I have behind the closed doors with other big participants. This is what I do when I'm not making these videos. The smartest players, guys, they're still accumulating quality altcoins like ETH, Solana, and Sui during the market chop. They're buying every single dip, they're accumulating, they're stacking, they're converting their cash into these altcoins. They're paying attention under the hood to innovation, like the robotics breakthrough Sui's founder recently hinted at, and looking for the projects quietly building the future. And of course, treasury stocks like MicroStrategy and MetaPlanet have now become the public proxies for Bitcoin exposure. Again, this is just the way institutions do it. Not my choice, not what I would do, but there is demand for it, clearly. And they're trading at massive premiums, these guys. The market is treating these stocks almost as if they're leveraged ETFs. And that's kind of an easy way to look at it. Meanwhile, stablecoins and TRADFI and FISERV and MasterCard and PayPal and Robinhood and etc. X are becoming a key piece of the puzzle. The more capital that flows through their stablecoins, the bigger the potential move when global adoption kicks into overdrive. X also, guys, if you guys didn't see, X is going to roll out payments and investing products on X, the Everything app. And of course, Elon's friend with David Sachs, the crypto czar, etc., etc. Of course, crypto will be in X, right? And so the most important strategy, guys, I would just suggest to you guys is what I've been practicing for years and years and years. In fact, I've never done anything else but just zoom out and look at the long-term horizon. I make these videos every day so you guys can see all the bullish conviction and news that keeps coming out so that you don't get shaken up and shaken out and sell into these brief periods of market panic. Right now, we are in a bull run, no doubt about it. It's slow, it's boring, that's fine. You don't need to be glued to the charts. You don't need to be glued to the price. Go out, enjoy your life, be healthy, go to the gym, do sauna, do ice bath, eat well, get your sleep. Because when we do have that short period of time with a crazy parabolic mania, and it will come, that's the time that we want to be really finding those lower cap altcoin gems that do that 50 or 100x or 20x or whatever. And we're going to take profits and we're going to keep our money, preserve it. And then we're going to buy Bitcoin later, right? When Bitcoin comes and crashes and corrects later. That's the plan. But for now, I think it's dangerous to be heavily exposed to these really small microcaps. Now, if you have high conviction in some of them, like I do in some of them, I've talked about them before, I'm not going to talk about them now, but you can get some of these things and they're super risky, right? But at $1 or $2 million, and they might go to 100 million or 200 million in this parabolic mania that we are going to have inevitably. So that's fine, but it should be a small percentage of your portfolio. And guys, if you are trading, we just partnered with Blowfin. I've been using them for about 6 months right now. I use them because I'm American. And if you sign up right now, you can get $10 in free Bitcoin. Plus, you get to spin this little fun wheel and you can win like Solana and Sui and things like that. The instructions are in the description below. Go check them out. Solid exchange with a solid reputation, allowing Americans. You can go long, you can go short, you can use leverage, etc., etc. So what's the real hidden trap, guys, of 2025? It's the loudest, it's the noisiest, it's the scariest periods. They're actually moments when the most supply is being quietly, relentlessly taken off the market. And it's happening. Trust me, it doesn't feel like it, but that's why we make these videos. Billions and billions and billions and more billions. As you guys saw recently, Trump has ETFs filed for Bitcoin and for Ethereum. You don't think that's going to send shockwaves around the world when it gets approved? Of course it will. It's all happening. But Kyle, the price isn't moving. Why? Blah, 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 blah. It's not moving until it does. And then it will fly. Because supply shock is a real thing. Because retail will FOMO back in. Because we will get stimulus. Because the Fed will lower rates towards September. All these reasons, when it finally does, it rips. And do you really want to be sidelined, sitting there waiting for that moment? Or would you rather just DCA in now, chill, and when that moment comes, you subscribe on this channel, we give you all the alpha, we play the moves, the next whiffs, the ones that make 100x, we take profits into Bitcoin, and your life changes forever. Guys, if you found value from this video, if you liked it, do me a favor. It helps the channel a lot, more than you know. All you have to do is hit that like button. Leave a comment in the description below because engagement helps push the channel. And share it with someone that you care about. It would mean a lot to me. It's a free way to help the channel. Thank you guys so much. That's all for today. I will catch you on the next one. See ya.